Welcome, everyone, to another episode of the Deep Q Cast. We are very excited over here. On stage, you have your moderator-in-chief, Robert Ridzak, along with his two compatriots, Carlos Zendejas and Matt Reed, co-founders of Deep Q Digital. Boys, your hair is looking particularly spiffy. Matt, we're excited. We're gonna keep this show tight so you can make it to get your hair did. This evening, we're really excited about it. That's good.
Much needed.
Are you going with the mohawk this time? What are we
I think so.
do?
It's about time we get that out again.
Excellent. When Bitcoin hits 100,000, you're just going to shave it all off? Was that the
That's
deal we made?
We've locked that in. Yep.
You're going for the Brian Armstrong Coinbase look.
Yeah, that's what happens when you get rich. Yeah.
Just like goatee, right? Like some fade. You're going to try to grow out a beard, maybe. Just do like swap it.
He's gonna go. We're gonna have to have like before and after pictures of Matt, like when he's like a crypto billionaire. It'll be like Matt now, and then he'll go for like the Mr. Clean HGH Jeff Bezos look.
That would be great if you just end up like looking pretty good at the end of it. I'd like that. He didn't have to do any work as well. He just paid and it happened.
Yeah.
That'd be good.
Like, what kind of idiot actually works out? You gotta take the shots, man.
Yeah, just gotta just steroid it up, man.
It's life-preserving drugs that make you live forever. That's what we need.
Yeah.
Speaking of life-preserving drugs, what are we drinking today?
Yeah, this is this is called Guanas Gold. So if you
is this similar to that? There's another can that's blue.
So this is Threes Brewing. I had one
Okay.
that probably is the. I had this last week, which was the black lager. This is rice lager. It's actually pretty good. It tastes almost like an IPO, not nowhere near as strong, very fruity. But it made me laugh because if anyone's ever been to the Guanas River, until recently, it wasn't very nice. It pretty much stunk and was pretty gross, and even a little bit now. So it was great area, love it there. But
I think
we looked at an apartment there in like 2017, and we were like, no, it smells a bit bad.
Is that where they source the water?
From what I understand, there's a lot of like
that's the color.
There's a lot of Italian businessmen wearing cement shoes in the Gowanus River.
Yeah, exactly. I've heard the same. Dredging it, they uncovered all sorts of things. I mean, it's a great place now, but joking. Did make me laugh. Seeing.
Excellent. What about you, Carlos? What you got
I
going
figured on a week like this, I needed a little comfort, so I'm back with my little sip of Americano over here. Going
Freedom?
full Patriot water, freedom, America, the greatest and best country / financial system in the world.
It's amazing. It's like 4th of July in a can.
You gotta love it. No, or as you said prior to recording, it's like a hot dog in a can.
Liquid hot dog.
So my dad was a tribal judge for our tribe back in Nebraska, and he used to tell us stories when we were kids about the tribal jail, and one of their classic meals that they would serve was called wiener water soup. And it is exactly what you think it is. Is they cook the hot dogs. They don't give the inmates the hot dogs. They eat those themselves. Then you throw a little flour and mix it in, and the water that from after cooking the hot dogs with some flour is what they give the inmates. So if you're ever in the mood to do something criminal, do not do it on the Omaha Indian Reservation in northeastern Nebraska. Just kind of throw that out there. So enjoy a crisp, refreshing Bud Light.
So is that basically like hot dog flavored pancake?
Something along those lines. Yeah. No, it's still soup. Yeah. You don't put enough flour in there to like make it congeal, just enough to kind of give it a little thickness.
Oh, so like a stew, like a hot dog stew. Well, except like without minus the hot dog. It's like a hot dog stew minus hot dog. Sounds delicious.
Yeah, it's tasty. So
that sounds delicious. Oh my gosh!
I was about to say we had the economic equivalent this week of wiener water soup.
be drinking that. Yeah, exactly. That's probably all the only thing I'm going to be able to afford this this week. So things go up. Speaking of which, yeah, it's been wild week. I know things are slow sometimes. This was definitely not one of those. News coming out also later. Obviously, you had Silver Bank, which was on the brink of becoming insolvent for a while now, and that kind of became finalized earlier this week. And then right at the tail end, we saw something that came out of left field, at least for Jim Cramer on Mad Money, because he was pumping a Silicon Valley Bank. I think it was like a month from now, saying there was more room for upside. They are now taken over by the FDIC, I believe. Is that right, guys?
Yeah.
Wow.
That is correct. No, I think that's probably from what I understand, that is the second largest bank failure in the history of the United States, only to Washington Mutual during the Great Financial Crisis. So we're kind of entering reasonably large territory. They had something along the lines of $200 billion in assets under management. I think I was reading today also that unfortunately, and this is actually sad. I think one of the biggest things that I take problem with is people who, take victory laps about calling sort of the economic demise of a lot of businesses, a lot of individuals, a lot of startups that are working on really interesting and cool stuff. But unfortunately, it's like something like 93% of all deposits at Silicon Valley Bank were above the FDIC insurance limit. So, a vast majority of those funds are now effectively just general creditors to Silicon Valley Bank. And it seems like they were reasonably well capitalized. So I don't think I would like to believe that there's going to be some good recovery rate, but it's still not pretty or nice to sort of like get in line during the bankruptcy process. That's not a fast and efficient process by any stretch of the imagination. I'd imagine you've got quite a few, blue chip startups and VC firms now that kind of have, sizable sums of money that are currently locked up in that bankruptcy process.
Yeah, they were big. They were like 16th largest on the Federal Reserve's list of important banks in the US. So they're pretty sizable. And I think, coming back to that, you could get your money out if you're insured by Monday, and then after that, I think they're going to lock it out and go through the proceedings, and they're going to issue unsecured notes and stuff, certificates, so people can claim that back as and when. It's sad.
Yeah, but I think it's also interesting to note that Silicon Valley Bank, while it's very involved in tech and a lot of VC startups, it had maybe some very loose affiliations with crypto enterprises. It was no Silvergate Bank, right? So it's just interesting to see how these, as I mentioned, like the NCAA March Madness basketball brackets keep on narrowing, and it's falling outside. Just like even more on the fringes now. Just general tech is falling prey to some of these loans. Was it loans that kind of did them in? Do you know, Matt?
No, so it's actually, you know what? To be honest, Matt is probably the best person to discuss what did them in, because Matt actually worked in the part of Deutsche Bank that did all the stress testing and the planning for these types of scenarios. So he's aware of sort of capital reserves quite intimately.
I am, but I didn't do much on the liquidity side, unfortunately. So, maybe not the best. But yeah, the real issue they had is usually you'll stress test your portfolio and your liquidity positions, subject to rate hikes, and there's a lot of stress tests people have to do. And I think I was talking about this earlier because I was surprised that, knowing the plan to increase rates over this year, that regulators hadn't gone in earlier to say, hey, are you prepared for a 4 or 5% increase in rates? So the big issue is a lot of people buy, even if you bought like 5-year debt, it's still worth like 10, 20% less. Or if you went further out the curve, like 20% less than what it was a year ago. So at the point at which you have to try and liquidate some of that high quality US treasuries, so they call it high quality liquid assets, the point at which you need to liquidate it, they're already taking like an 80-cent mark on the dollar, which is a big drawdown to take as a loss up front. And that's really what happened to them. They they had some outflows. There was some, as we know, a couple of the big VCs were telling their investments to pull funds. I can't remember who was the guy. Actually, it wasn't Andreessen, or who was it? The founders.
It was Peter Thiel at the Founders Fund.
Yeah, Peter Thiel was the one that published. And so the minute you start having people pull capital, like, you then have to start covering some of your liabilities. So, and the way to do that is you cash in what you have available. No one has all that cash at hand, so they had to go out and sell some of the high quality liquid assets that they had available. Some of those could even be treasuries. They had mortgages too, which, you know, the Fed and that love you to hold, because, you know, they're the most liquid. You can sell them in stress times and very fast. But when you've got an interest rate rising environment, they're actually worth an awful lot less. So it means you are going to take losses.
Yeah.
And that's, yeah, go ahead, Carlos.
I think this is actually somewhat interesting, because Silicon Valley Bank and Silvergate actually went down for the exact same reason, right? Which is, you know, you are flush with cash when the Fed is printing money, and you've got clients that are, you know, just shoving dollars your way. And when interest rates are zero, you're happy to have your money sitting in an account somewhere, because there's just nothing else to do with it, right? So you just take your money and you put it in a bank and you have it sit there. And the bank goes out and it buys, you know, like, you know, long duration, 2%, you know, asset backed securities, like, you know, home loan, you know, mortgage backed security or something like that. And like Matt said, all of a sudden the Fed says, cool, we're going to start raising rates.
At an unprecedented rate as well, which,
yeah. So now all of your clients are like, okay, well, now I'm sitting here earning nothing in a deposit account at Silicon Valley Bank or Silvergate. What I'm going to do is I'm just going to pull these and I'm going to put them in Treasury, right? Like, why would they make zero when I can just literally put them in a CD making like 5% a year?
Yeah.
So if you just raised a massive round as a Silicon Valley startup, you're not going to have that money sitting around doing nothing. Just put it to work while you're waiting to deploy it. In the meantime, though, Silicon Valley Bank has already had, you know, these like loans that are underwater, and you know, then when you have to cover your liquid assets with the stuff that the Fed told you to buy in the fucking first place, you take these massive losses. Now, I think where this is interesting is that when you're a small bank, you have the opportunity from accounting perspective to basically snap that into a different book. So let's say, for example, you bought all these like long dated securities, the Fed raises a shitload of rates, and you have to mark those down. Instead of taking a big P&L loss, you can actually just move it into what's called your hold to maturity basket. So you can basically just say, oh, I wasn't planning on accessing these anyway. I'm just going to hold them to maturity. So instead of taking a massive haircut on these loans of like 20%, I'm just going to like say, yeah, I wasn't planning on selling them anyway. I'm going to mark them at par on my book. And your income statement, your, you know, financials look like you haven't taken a, you know, $1 billion loss until you actually need to sell them to cover withdrawals. And that's where the problem comes, is once people decide that they need to withdraw, suddenly you can take that little accounting trick and throw it out the window. And now all of a sudden you have to mark that loss immediately to cover the shit that you have on these demand accounts. It's called mismatched duration, right? Like someone can pull money immediately and you've got this long dated asset that's very prone to interest rate moves. To me, the scary thing, and I'm not trying to like cause any panic or anything, but I think it's just like pretty reasonable, is I would be shocked if JP Morgan has this problem. But I wouldn't be shocked if, you know, any bank outside of sort of like the large money center banks like Bank of America, JP Morgan, Citigroup, Wells Fargo, it's very likely that a lot of banks could be in a very similar scenario should there be a lack of confidence in the banking system. And that to me means that the Fed has a little bit of thinking to do in terms of how aggressive it wants to be going forward.
Interesting. I mean, but as I understand too, Silicon Valley Bank, they were the largest focused bank on venture capital space, tech in general. Like they carved out a very nice niche. I imagine there are other competitors similar to Silicon Valley Bank. To be honest, I don't know them off the top of my head, but I imagine those would probably be the ones that are even closest to following their big brother.
I mean, you saw that in the market this week.
Yeah.
I think, basically every mid-sized to small bank took a massive haircut on their valuations. So, Signature Bank, who's another crypto, focused bank, was down like 27%. Zion's Bank Corp, that basically like their, raison d'etre is basically they manage $100 billion in deposits for the Mormon Church out in Utah. They took a massive haircut. Like Fifth Third took a haircut. Like basically all these like middle-sized banks that have kind of that like 20 to 100 billion in assets sitting around. Everyone was like, hold on a second, you guys might actually have the exact same problem. And unless you have like a really, really, really good treasury team, and, let's be fair, I think, and this is one of the reasons why I think if you're at JP Morgan or Bank of America, you've got some super sophisticated guys and some super sophisticated teams handling this type of risk. But if you're just kind of sitting at Silvergate Bank in La Jolla, California, or Silicon Valley Bank or M&T Bank in Buffalo, New York, or something like that, my guess is that you probably don't have the same level of sophistication in terms of handling like your duration risk and really understanding that. So this could very well be sort of like a thing that can get out of hand if people haven't taken the correct risks, and likely it's going to require the Fed to come in and backstop and give some confidence to the market, which to me, I think is probably the most important thing. Is like if I'm the Fed right now, I'm looking at like my number one job is to say, cool, let's put inflation on the back burner for a minute or two. It's still important. Let's not forget about it. But like the most important thing that we can do is instill more confidence in the banking system right now.
Like shortstop, right? Just you have to have that backstop to allow depositors not to have a run, create a self-fulfilling prophecy. Yeah.
Because it could very well be that like Silicon Valley Bank is, just an anomaly in the market, and everyone else did the right thing, and so like they're just a bad actor, maybe not even a bad actor, but just like a careless actor. But once the market gets it in their head that their bank could not be safe, there's no well-run bank that's immune from having a massive problem when they have a massive outflow of capital like that.
Yeah, wild. I was reading an article. The CEO just had told his employees Friday morning to not come in and just work from home on Friday, which maybe they were already doing that to begin with. But it's just like I'm
sure they were all working diligently. I'd be.
Oh yeah. It just reminds me of Lehman Brothers too. I remember I was back in 08. I was like one of my friends sent me the note about Silicon Valley Bank. It just reminded me of 2008. I got a text message from a friend, be like, "Turn on the TV. Lehman Brothers is going under." I looked. I was like, "Wow!" I was like surprised. It was a surprise for me at that point.
You were. I think you're one of the few people that I know that was working in finance pre-GFC and remembers those days. I started in tech, and I didn't make my way to finance until post-business school. So like you're kind of like an OG in that category. Yeah,
but I was also like a fresh out of undergrad.
Doesn't matter.
Didn't know my head from my ass back then. But I was like, oh, Lehman, oh my God, this is crazy. Luckily, I was cheap enough back then so that I was able to weather the storm. Yeah,
that's one of the things. Like, it's always funny to me when analysts get like super concerned about layoffs. I'm like, you realize they're not gonna fucking lay. Like the person that's got a target on their back is like the director or managing director that's got a $500,000 to a buck of of compensation tied to their name. Like, those are the guys you cut.
Yeah, it's like 20 analysts. Yeah, I think like my first job, I was not making a ton of money. No, I was like, I shouldn't have been far less worried. Boys, want to move over to some a little more macro stuff? I know this is something that gets you guys all excited. I'm excited to talk about it.
Yeah, so I want to make one more point about Silvergate, and I'm sorry to hijack it.
No, go ahead.
But I personally think it is despicable what Elizabeth Warren did with Silvergate. One, in the sense that she was working with short sellers, in the sense that they helped her write her comments that she used to testify in front of Congress about Silvergate. And then afterwards, she posted this thing on Twitter basically saying that, Silvergate went down and that it's predictable because they were dealing in unsavory types of businesses with crypto and all that sort of stuff. And, I think anybody that would turn a bank failure that hurts, individuals and businesses, to me, I think that's behavior unbecoming of an elected official. So that was very sad for me to see. I think that at this point in time, we all need to be cognizant of the gravity of those types of flippant comments, because we're talking like real people, we're talking real businesses, and we shouldn't be, especially as like elected officials, using these things to flip a political narrative that's just not true.
Yeah.
Well, and it kind of shows it's not true because SVB had much smaller ties. Their exposure, like balance sheet wise, would have been negligible compared to what.
Yeah. I mean, so I think, exactly. I think that the real issue here is more of a macroeconomic issue of how do banks manage their risk, how do they manage their liquidity and their capitalization, and what's the impact of this in, as Matt was saying, uncharted interest rate regimes. We've just never seen the Fed raise interest rates to this magnitude, and something broke, and it wasn't because Silvergate was working with crypto. It's because they mismanaged their duration risk and their treasury. Like, that's exactly what happened.
Yeah, it's also interesting just to note how, this is kind of like but Silvergate also, Silicon Valley Bank, though, they knew that rates were rising, right? So, do you think was it a liquidity? Not to dig into it too much, but was it more? Do you think this is more of like a liquidity issue that they weren't able to unwind some of these other positions fast enough after the fact? Do you think
so? Yeah, I mean, I think they probably got greedy, to be honest. They had a choice, right, back in 2020 or 2021, about what assets to invest in, right? And there's a number of different ways to protect yourself against duration risk like this, right? You can get floating rate, options. You can get swaps to swap your fixed to floating. There's just like a number of products out there, which admittedly eat into your profits, right? You're not going to earn as much yield, but then you get protected from these convexity tail risk issues where your bond portfolio can create massive losses just like instantaneously. So in my mind, it's either carelessness or greed at its core. Like, they didn't understand the risk of the product they were using to earn yield, or they were greedy and didn't want to spend the money to hedge themselves properly. One or the other.
I'm sure we'll find out.
Yeah.
I'm sure this will be a very well publicized event. Cool. All right. Are you done? Are you done getting out? Can we get off your soapbox so we can get on to macro?
I guess.
It's true.
You can tell that Elizabeth Warren and Gary Gensler have a little party every week to get on the top of Carlos's favorite persons list.
Yeah, I was just gonna ask how is Elizabeth Warren? I was kind of does this actually if there was a point system as to who's winning Carlos's favorite person of the decade award? How is what's the spread between the two of them?
Well, Elizabeth Warren had a head start because all right, so I don't want to get too crazy, but the fact that and this actually means a lot to me because I am Native American, and my family has like deep ties to our Native American heritage. You know, my dad, works on our, for our tribe. All of my sisters are, active in the, Native American, law space. And so like, it's something that's actually like really near and dear to me, and I take it very seriously. And so one of the things that always bothered me about Elizabeth Warren is that she claimed sort of Native American heritage with no background and used it to her benefit in order to, get into schools and to get elected as part of some, identity politics. And
I remember that.
I'd forgotten about that. Yeah,
that always put me at maybe a slight, maybe you're not the best of people. And then obviously, and don't get me wrong, I'm a populist. I actually, like, believe it or not, I might sound like a crazy person on the podcast, but I actually am for, most sort of like socially liberal policies. And one of the reasons why I'm in crypto is because I care about, populism. I care about people having sort of their own, financial autonomy and being protected from outside interests that, are more profit motivated and don't, take care of themselves. I think that there's a difference though, because I think Elizabeth Warren tends to do those for political purposes and not for actually protecting people. And I think Gary Gensler falls into the same category. It's like, you can't say that you're protecting people, but actually not protecting them.
Or like we're protecting them after the event. It's like,
yeah. Or in the case of Gary Gensler, it's like, listen, I'm protecting you after the fact from people that were actually trying to do the right things. But also, when there's actually real infractions in financial markets, I'll make a TikTok video about it, but I'm not actually going to do anything because they donate too much money to political parties, and I don't think I can win that war. So I think there's a little bit of disingenuous about the whole SEC narrative as well.
Yeah,
which was also sort of funny because this week, and I've never actually seen this before ever, but Gary Gensler went on a full-out offensive about like everything, including Bitcoin, is a security. And I got to hand it to, I forget his name. I should look it up and know it and like put this guy in my circle of honor. But the guy who's currently heading the CFTC was basically like, no, it's a commodity. We approved Ethereum futures contracts on CFTC exchanges. And we wouldn't have done so if we didn't think that we had a very strong legal background to do so. So come at me, bro. Let's litigate this shit in court. And I was like,
I love that. I love it. It's just you're watching. It's such a publicized feud between the CFTC and the SEC. It's very interesting to watch that stuff unfold.
Well, because that's not the only person. We had the New York Justice. Was it what's her name? Lita James or?
Yeah, the New York Attorney General. They sued like KuCoin for selling an unregistered security, and in the suit explicitly named Ethereum as a security.
Yeah.
So, and I think people were like, "Ooh," then the market sold off. And I'm like, "Nah, I think the market actually sold off on Silicon Valley Bank." but sure, yeah, like whatever you want to do, that's probably the case. But I do think it was a little egregious that they went that far. I don't think anything is going to hold up in court. In fact, I would actually welcome an actual litigation at this point, because I think that's probably the best way we're going to get clarity on anything going forward.
I feel like it's gonna get to that point. I mean, you had Grayscale too that was filing that filed with the court over their interest in trying to create a spot Bitcoin ETF, and there were some favorable court rulings in favor of Grayscale versus the SEC too. I mean, like the Grayscale Bitcoin Trust was trading at discounts, something like 40 45%, it collapsed up to like the 30s or so. After that favorable news, there's a pretty big uptick. So it's just interesting to watch the gloves come off with some of these crypto firms and fighting back against the SEC. It's incredible how political. It's not really about the best interests of the population. It's about who can attract and hold the most power. You see that. You see this play out. It's like there's so much infighting and disagreement, and some of it's so blatant. You have to ask yourself, like, what are the underlying motives around that? Politics.
Like that's why to date the SEC's preferred strategy is to go after smaller players that can't afford to defend themselves properly. But I think when they've gone after larger people, so we've had positive news, as you mentioned, in the Grayscale case, who has plenty of resources.
Yeah.
It seems, based on comments from the judge, that Ripple is going to win its summary judgment against the SEC as well. And I don't think that the SEC really wants to have a court case with, either Circle or the Ethereum Foundation about, whether either of those are securities. But they're happy to go after Paxos and KuCoin and, whoever else. So it's kind of a weird situation. Once
Which
again,
is kind of stupid because it doesn't get to if there is a systemic problem, they're better off going for those, like putting taxpayers' money to use and getting the root of the problem addressed.
Yeah.
Like it's just, and then everyone has clarity. It's just absurd to go after the smaller, low-hanging fruit just to get a
This is like playground bully politics. It's like, go pick on the weaklings, look tough, and hope that no one of any substance comes after you.
That's not going to last very long, I'm sure.
Yeah. It's like when you go to prison, just find the meanest looking dude to hit him square in the face.
I thought you were going to say, like, take his inner pocket or something.
Yeah, exactly. It's like, just please
protect me.
I don't know who's who in that analysis, but sure.
It's so funny, guys. I going to lay down the gauntlet, though. Macro, I know we got a couple more minutes before we'll have to wrap up the show. Maybe we can talk a little bit about non-farm payrolls, employment, hourly wage growth. Things a little bit mixed signals, but overall positive. Is that a good Cliff Note summary?
Yeah, I think the market reaction was kind of positive when this first hit the deck. That was in equities and crypto. The jobs numbers came in higher than expected, so we have more people in employment, which is great. Kind of bad if you think that leads to then people having more money to spend and inflate the economy. But then what we also saw is that the payroll, the wage growth is not increasing. So we got more people with jobs. So in theory, there's more money, but these jobs are just so low paying. And overall, there's been a decline in hourly earnings. So those were two numbers that were not ideal. And the unemployment rates also kicked in. So we've obviously had some high earners get made redundant as well.
Mm-hmm.
So in the long run, I think this is probably it. Okay, the actual job numbers probably could have come in on expectation, but then otherwise this is exactly what you'd want to see for a 25 basis point hike. It's not overly hot. I think there was a revision down from the previous month as well, which was the big up surprise. So this is kind of like good news for the 25 basis point argument.
And you had Joe Biden shortly thereafter make the claim that he guarantees CPI is going to come in nice and as expected. So
he guaranteed it, did he?
Yeah, he's coming in hot. So either he gets the numbers and made a gaffe, or he's just making stupid statements. But I think that's something you can take to the bank, ladies and gentlemen.
When the president says something, and it's almost a 50% chance of happening.
Yeah, exactly. It's good times.
Like we were talking about this earlier today when it was happening. Like what I think our main focus is really we've had so much news this week. Like price action has been horrific, but we kind of we're looking for that bottom. We're not sure what the contagion is in the wider market still from this SVB, so pretty cautious there. But if we get a really strong CPI print, like it is coming down still, I think that's a really good indication for the next couple of months. So yeah, and that's on Tuesday. So we'll be not long to wait, right? And then we should have a pretty good idea.
Yeah.
Matt and I slightly disagree on CPI because I think Matt is sort of on Matt, it's basically what we were talking about earlier. Matt kind of wants to see what CPI does before he gets bullish on a 25 basis point hike. My personal view is that I think CPI is somewhat irrelevant now. I think that the Fed almost has to do 25 bips because if they do 50, I think they're going to nuke confidence in the financial markets. So I personally think they're going to go 25. But it would be significantly better if they did 25 and then all the data also aligned. So I think if we got that, we'd actually start to see, risk markets. I wouldn't say rally, but I think they'd stop being so fucking scared. Because I think like the hallmark of this past week was just max fear in the market.
Yeah. And we've seen some big liquidations as well, right? Even with, what we started with Silvergate last week, and then, there was that news that the US government was putting in some of their Silk Road funds on Coinbase to liquidate them. So there's a whole bunch, and then the SVB. So we've seen a lot of max fear plays and potential large liquidations all happen within the same week. So it's been pretty risk off.
Yeah.
But yeah, I agree. I agree with your comments that was our disparity. That I think this has been, until recently, it was pretty strong price for 50 bips. It went up to like 80%. Then after the numbers today, it came down to like 50-50. And then after SVB, we've seen it go down to like 60-40. So the 50 basis point is coming off in line with what Carlos is saying. The risk of the increase isn't worth it right now. But if all the numbers are aligned, I think it's probably the last chance they're going to get to do another 50 if they so wished. Obviously, I think the risk of systemic breakout in banking is larger potentially than the gain of them doing another 25, because it's just going to compound this issue of increasing rates, selling them at even more of a loss. So I think they'd have to get a handle on what the impact is to the banking system first before they materially really push more and more hikes. Didn't you say, Carlos, that you saw end of the year a price decrease yield?
Yeah.
And that was the first time you've seen it?
At least as of today, and this could have like reverted back because the markets have been just really fucking spastic. But they were pricing a potential 25 basis point price decrease in the rate by December 2023. So, I mean, markets are all over the map. Everyone's confused. I personally don't think the Fed is going to pivot off of Silicon Valley Bank. Not even close. I think if you're pricing that in, I think you should prepare to be wrong. But I do think that it will cause them to continue on a more measured path versus I think prior to Silicon Valley Bank hitting the fan, my money would have been on them opportunistically taking the opportunity to do 50 basis points because they could and the market was expecting it. And like that would be like their last opportunity to really get like a solid rate hike in before, they risk doing more damage. I think that's off the table now. That's just my personal view.
How have you guys seen the crypto markets trade this week? I mean, with all of this news,
Max. Honestly, it's max fear.
Is that a technical term?
That's a technical term, yeah.
Well, the interesting thing too is that when it goes in waves. So like. Yeah. For the majority of the week, it would like Bitcoin was just trading in like a $30 to $40 range, nonstop. Just didn't move. It was stuck, and then it broke through, its support and just crashed like $1,000. And we're like, all right, I think this is the bottom. And then Silicon Valley Bank hit, and it broke through again. So right now it's kind of resting on this like 19.5 to 20K. Support level. There seems to be reasonable liquidity there, but I I guess the only question that really should be remaining in your head right now, if you're trading Bitcoin or Ethereum, is who else out there can go out and just fucking slam the market right now? Because I think that's the biggest downside risk is someone getting liquidated in size. And I think, a lot of retail got liquidated because a lot of retail was buying the dip yesterday before Silicon Valley Bank, and so they got wiped. I think Silicon Valley Bank and Silvergate, if they had liquidations, are already out of the game. So to me, I'm sitting around just thinking, okay, well, who's next? I don't know. I don't think there's many more players with significant size to be liquidated that would be liquidated. Mm-hmm. So my money is really on the fact that, like, once we kind of hit this, unless there's mass contagion, and we have more bank failures and we just have a confirmed hard landing, my guess is there's not a lot of downside left in the markets. It might grind a little bit lower on fears, and it might, have some little flash crashes here and there. So it might be wise to, if you want to get in at cheap levels, put some levels down in the order book and just be a vulture. But I'm not suspecting it to grind and stay at a much lower rate than it currently is now. Could be wrong. Have been wrong. I said the same thing at 23K, but that's my play.
It's good. Well, it's not always about being right. It's about being right on average, right?
There you go.
Love it. All right. Well, that's a positive note. I mean, what else you guys? I mean, I know it's kind of a brutal week news wise with a lot of bank turmoil. Anything to feel positive about in the crypto markets?
Crypto specifically, I was keeping on top of the Shanghai upgrade, and that looks like it's on schedule for April. So that'll be the first time where you can start to unstake staked ETH. Could be some price impact as a result of that, but to be honest, just having that ability in the ecosystem, I think is massive. I think it would, if anything, bring more people to it long run, because you can be a staker or not. It's your call at that point. Obviously, still some issues in the US. Like we know Kraken had to turn off that facility, so it's kind of like, where do people do it if they're not going to do it themselves, because it's quite a big cost to do it yourself. But in general, I think that's really positive place to be. Shows that Kraken Ethereum are moving, develop in terms of dev work in the right direction, and it's a big release to the ecosystem. So awesome. I'm pretty excited about that, and that's in a month's time or so.
That's fantastic. I know it's been such a long slog for Ethereum to go through the merge and all these upgrades, but the execution. I mean, I think about them as like those phenomenal Romanian gymnasts, and they're twirling around. It might take a lot of prep, but they're sticking the landings, which is really, really nice to see. It's awesome.
I think that's super accurate.
Yeah.
I'm personally pretty bullish about the Shanghai update. I think that should give a lot of people confidence to put their money in, knowing they can get it out. On the whole, I'd say I'm really, really, really excited about DeFi in general. I think, one of the things that we've seen over the past couple of years is, we were super nervous about having our money on a decentralized crypto exchange. And we've had several of those go down in the history of Bitcoin, most recently FTX. And now we're all very nervous about our bank not being sound. Which, who fucking knew, right? But the thing that I think actually is kind of interesting, and this was one of the core tenets of crypto, and Matt and I have been looking into DeFi quite a bit more, is just how beautiful of a concept it is that effectively you can use a centralized censor resistant application that isn't run by people who might take off with your money or become rent seekers. It's actually kind of cool. And if you look at the technological advances that have come on Ethereum or have come on, faster side chains like Polygon or alternative layer one applications like, Avalanche, I think that there's a lot of really, really, really cool stuff happening in the space. So for me, the more and more I look at the actual tech and the more I look at the actual products, when people are like, oh, well, you know, what's the actual utility of crypto? I'd be like, have you seen DeFi? It's actually really cool. Like anyone who has any sort of like doubts about the utility of, of crypto should really check out, some of these DeFi platforms and just see the really interesting and cool stuff that's going on there. I'm very, very, very bullish.
Yeah, they're good points. I mean, you look at a lot of the issues that we've had, and look, I mean, on-chain protocols have, you have Terra Luna, for example. It's not without their own share of challenges, but by and large, the big challenges or the big the blips that you see with different initiatives going bust has been more on the centralized side, and a lot of it's been due to human error. It does make me really excited about DeFi.
Yeah, there's something really cool about a peer-to-peer contract system where you can basically set up whatever you want. I think that is fundamentally, and then just seeing what people are building out of it is really, really cool. Keen to see where it goes.
Yeah, I touched on this before. Just like it's interesting to see how much of this has really been centralized. You have like FTX, you have Silvergate, you have Silicon Valley Bank, all going under. These are all more centralized institutions. While you see, the efficacy of Ethereum and Bitcoin remains the same. Whatever doesn't kill you makes you stronger, and we're going to be able to take a lot of these lessons learned to make the ecosystem a lot stronger going forward. So this is all a part of the growth process. Sometimes it's hard to go through that, but you can come out of the other end very strong. So keep trucking.
Yeah.
With that, I'm going to finish my beer. Guys, it's a pleasure seeing you. Thanks for stopping by.
Have a good weekend.
Take care.
Cheers, boys.
Bye.
Bye.